seen weakness filter through to the local unit chart, showing it could go over 8 to the dollar. And that bad news for our importers, jubilation for exporters. What are you making of the trend we're seeing and its sustenance? Because certainly that weakness we saw yesterday didn't last very long before some strength, albeit slight, filtered through.
Morning, Alishia. So the rand had a brief period of respite yesterday. Did look like it was going to make an assault on the 665 level once again, but failed to do so, and is now back above 670. So in the short term, we'd been looking at the rand to break through the 673 level and then perhaps head as far as 680. So we still have that view, and that would persist until the end of this week.
Of course, a lot of what happens is dependent on what happens in the euro and in the eurozone specifically. What's your outlook on the euro front, or would you very much need a crystal ball to have that outlook right now?
Absolutely, a crystal ball would come in very handy at the moment, particularly with regards to the euro outlook. As far as the euro is concerned, we still think that against the dollar is going to head to about 120. But as far as how soon it gets there, a lot will of course depend on developments that are currently unfolding. So the talks that are going on with Greece, and of course whether the Fed announces further measures of quantitative easing this evening. So those two are going to be the two key events to look for today as far as the euro dollar direction, and of course that's also going to filter into the rand direction over this week and going forward.
The big change within this entire scenario, Nomvuyo, is that capital has started to flood out of emerging markets. So where we had in the early part of this crisis emerging markets suddenly having emerged, so to speak, they were treated in their own merit, not simply lumped in with risky assets. It seems that the old relationships are starting to surface once again. To what extent are you finding that interesting right now?
Alishia, I'm not sure to what extent it's old relationships resurfacing. I think an earlier guest on your show alluded to it, that with the mounting concerns over Greece and a potential default from Greece, there's now mounting concern that in the Eurozone this crisis could turn into another liquidity crunch like we saw back in 2008, 2009. And so to that end, you're finding investors starting to repatriate funds back to their countries. And so they're starting to liquidate assets that previously looked to be offering good value. We've seen falls in Asian currencies, also seeing strong outflows from South African bonds, and these are assets that over the past few years have investors have actually been flooding into, largely as a result of the problems that they're experiencing. But with the prospect of a potential liquidity crunch, I think investors are faced with the tough choice of having to liquidate even assets that are offering good returns at the moment.
So consensus at the desk this morning in terms of why we're seeing this outflow of capital from emerging markets like South Africa. As I said, there are pros and cons for industry, specifically the pros apparent, where you've got sectors like mining and agriculture set to benefit from a weaker rand. But on the minus side, it would be damaging to the inflation picture. We're anticipating that inflation number to be released a little later today, and consensus is for 5.5%. Where do your forecasts lie?
We're in line with consensus for this month. We see inflation accelerating to 5.5%. Of course, it's also key that the MPC meets this week, so this inflation number is going to be all important. And those two drivers that are always the usual suspects, food and energy prices, are of course going to be top of the list for things to look for. Having said that, we don't think that this particular number is going to have the final say as far as the rates meeting is concerned. The MPC is still going to have to balance the downside risk to growth that appear to be intensifying at this point, with the upside risk to inflation, which also appear to be intensifying at this point with the rand having depreciated so sharply. But all that said, we don't think that there's going to be a move or change in rates at this meeting, or in fact for the rest of this year. We still see rates on hold all the way into Q3 of next year.
Nomvuyo, always a pleasure. Thanks so much for your time this morning. Nomvuyo Guma is Macroeconomic Strategist over at Standard Bank.